Hey there, welcome to Neppy Invest. So in this video, I'm going to give you 3 companies that have provided the market with a profit upgrade or some guidance for the financial year or the half year. Now, if you know anything about me, you know my favorite sort of announcement is a profit upgrade. And the main reason I like profit upgrades is it can lead to a significant share price appreciation in subsequent months. Doesn't always, but it can. And the 3 companies I'll be focusing on today are all in the same sort of field or area, but the main difference between these 3 companies is the valuation. So they range from market cap of 30 million all the way up to $8 billion. And if you know these 3 companies, you'll know that Bluescope is going to be the larger company that has a market cap of 8 billion, GR Engineering that has a market cap of about 180 million, and Valmec is the smallest of these 3 with a market cap of 30 million. So let's start on the smallest market cap company and then work our way up. So Valmec, this is a company I know a little bit about, but because of some of their financials, I usually just keep on moving once I have a little bit of a look at them. Now they do have a market cap of 31 million. Revenue, that's on revenue of 112 million, so price of sales is quite low, and you would probably think, if you are a very deep value investor, that's sort of in that sort of really good value area. When the price of sales is about 0.25, there might be a reason behind the good value though, and one of the reasons might be operating cash flow negative in the previous financial year of negative 2.3. EBITDA's 5.1 million. Now, the announcement it gave us, which is sort of guidance for the first half of financial year 21, is very, very promising, especially when you compare the numbers they give us to the previous financial year. So first half EBITDA looks like it's going to be around 6.1 million, which is actually more than the previous year full year of 5.1 million. Revenue expectations about 61 million, previous year about 112, so that's nothing much. And the line that really got me interested was a strong cash flow from operations of 7 million. So 7 million in one half, and compare that to the previous year, which was negative 2.3. So a very strong half Valmec is looking towards, and they expect this to continue into the second half. In fact, if you read the rest of the announcement, they're very bullish for the second half. In fact, they think it's going to be better than the first half. Now this is, so we're going to look at 2 charts. The first one is the 5-year weekly and the second one is the 6-month daily. And the 5-year weekly just shows you that nothing much has been happening with the share price of Valmec over the last 5 years or so. So this is sort of a company where you'd buy at sort of a low point in the share price and then sell when it gets a little bit higher. And the low point in the previous year has been around 15 cents and it's been growing since then. So around about 24 cents last time I looked. Volume, so nothing really going with volume. PES volume has been around the end of 2017 to start of 2018, when we did see the share price rising from about 14 cents all the way up to 40 cents. So that would have been a good time to buy. And you just see with this chart that some companies you just don't buy and hold. You can buy and sell based off the movement in the share price. So you would have made a fair bit of money if you bought this around 14 cents in the middle of 2017 and then sold it when it got to 40 cents in 2018. Now, even though it's got here, it's a 1-year daily, this is actually the 6-month daily. And you can see, you know, the one thing I really like to look at with this chart is the volume. I like to see increasing volume. We've got 4 days here where we have got volume spikes. That could be anything. It's not really indicating anything in particular. Probably the one good thing about this chart is we are seeing a bit of an uptrend develop, but I like to see a little bit more volume with the beginning of this uptrend. So this profit upgrade or this guidance is actually fairly good for the company based off the valuation. Market cap of 31 with operating cash flow in one half of 7 is very attractive. So I'd like to see this continue. I think the market is maybe suspect that this sort of performance can continue over the longer term. Second company I'll be looking at is GR Engineering. So a little bit higher market cap, so more valuation. You can see revenue about double what Valmec does with 222 million. They are operating cash flow positive to 11 million and EBITDA is about 5.1 million. Now, the guidance they gave us was a profit, well, actually it wasn't a profit upgrade, it was a revenue upgrade. So the previous revenue guidance they gave us was, this is for the full financial year 21, not for the half year. So the previous guidance they gave us was between 200 280 million and 300 million, which is significantly higher than the 222 million in the previous year. The new guidance is between 340 and 360 million. That's even substantially higher than the previous year's revenue. Now, the most unfortunate thing about this guidance is they don't give us any guidance about profit, cash flow, EBITDA, anything like that. It's all about revenue, and you might argue that this could be low margin revenue, not higher margin revenue. But the one thing they did provide us in the rest of the announcement was they are seeing improved margins. So lower margin revenue is probably out the door, and they are seeing strong cash generation. The only thing I would like to see is what sort of numbers are we seeing in regards to that strong cash generation. So if you need any further information about this company, just look at their announcement they released on the 2nd of February or any other announcements they've released in the past 6 months. Now again, just be looking at the 5-year weekly and the 1-year daily when I get to that chart. And this chart doesn't show us much. Again, nothing much happening over the past 5 years. We have seen a couple of nice uptrends. The best uptrend was around about the end of 2016 when the share price went from about 90 cents all the way to $2. Then from that peak in 2016, it's been drifting down. So it's been drifting from $2 all the way down to 60 cents in the COVID-19 financial panic, and then it's been going upwards since then. So maybe we are seeing the beginning of a new uptrend, and we can confirm that with the daily chart in the next slide. So here we have the 1-year daily chart, and we're definitely seeing a bit of an uptrend develop over the past 7 months or so. The only thing probably turning me off this chart was no big substantial increases in volume. That's the one thing I'd like to see. But we are seeing the share price right now as I speak around $1.29 or so, and that is the 1-year high. There are some people who hate buying businesses when the share price is at an all-time high or even a 1-year high, because some reason they think it's only one way the share price is going to go, and that is down. And I actually think it's the opposite. I think there's less resistance, there's more leeway for it to grow in share price if it's an all-time or 1-year high. So I'm a little bit negative about people who think that you should never buy a company when the share price is at an all-time high, but that's probably for another video. Now, the last company I'll be looking at is Bluescope. For full disclosure purposes, I actually do own this company. So this is the largest of the 3 companies, $8.4 billion of market cap, on revenue of $11.3 billion. So price of sales is less than 1. That's a big tick in my book, but there could be reasons why it's like that. Operating cash flow, $818 million. That's a little bit of a negative. I would prefer to see that a little bit higher based off the revenue they have. So they do have low margins, it seems like. And EBIT for the last financial year was only $333 million. So keep that in mind when I talk about their EBIT upgrades. So they're focusing on EBIT when they're doing upgrades. So the upgrade today was increasing their guidance for EBIT from $475 million to $530 million. This is 1/2. So this is not the full year EBIT, this is 1/2. So they are expecting EBIT for this half to be higher than the previous year's EBIT. They did mention some of the reasons behind the rising EBIT, and that's rising steel spreads, increasing volumes, improving conditions among all segments and divisions of the business. One thing I've been confused over the past few weeks is Bluescope's share price has been going down, but steel prices have been going up. It's just crazy to me and shows you that the market is inefficient. Now, this is not the first upgrade Bluescope have revealed over the past 3 months. In fact, they've had 3 upgrades in 3 months. The first upgrade was the 23rd of October, the second one was the 19th, and the third one was the 29th of January. So they've gone from $340 million in EBIT to $475 to $530. So you would think this is very positive for the share price. It's been sort of positive, especially after the first upgrade, but recently, over the past 2 months since the 19th of November upgrade, share price has really done nothing. So the market's really not believing the story of Bluescope, even though they're providing information, financial information, that the story is improving, which is insanity. So some people might say the market is forward-looking. So the market is looking, maybe a year in the future, and then it's not looking bright for Bluescope. But I think that's a bit inane. I don't think that's actually the absolute truth. Anyway, so this is the 6-month chart. You can see the 3 upgrades I put on here, the 23rd of October. And you can see when they released that upgrade on 23rd of October, the share price did gap up. And then the share price subsequently fell in the subsequent 5 trading days. That's just insanity. Again, why would you sell out when there's been a profit upgrade, especially 5 days after the fact, at a share price that is lower before the upgrade? That does not make sense at one little bit. Second upgrade, we did see the share price get to $18 on the 19th of November. And ever since then, share price has been going either sideways. It looked like it was going to break out at the start of January when it got above $18. It seems like it was a false breakout. A fair bit of selling came in. And then the second upgrade was at a share price lower than the most previous upgrade. So this is just insanity. The Bluescope business is improving, but the share price had been dropping. It just doesn't make sense. The only way that makes sense is if the overall sentiment in the market is pretty negative. You could probably say that over the last week or so, maybe it has been, but that means the share price should be good value at these prices. So last time I looked, it was at about $17. Got as low as $16 a few days ago. That's just insane based off the profit upgrades or the earning upgrades this company has been releasing. So that's all I've got for these 3 companies, Bluescope, GR Engineering, and Valmec. If you have any comments about these companies, leave it in the comment section. If you think I'm insane for thinking people insane for selling out of Bluescope, for sure leave a comment, because I love to hear differing opinions to myself. I can be wrong. I have been wrong on many occasions. And then finally, I'm not a financial advisor, so even though you might be thinking I'm giving you financial advice, I'm not. I'm just doing this video for entertainment, research and educational purposes, and to give you some ideas, maybe for some inspiration so you can do for some further research. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial circumstances. That's all for this video. Have a good day. See you later. Bye.